Hi, and welcome to the We Gonna Make It podcast show. Today's episode is all about central bank digital currencies, or CBDCs. CBDCs are a form of digital currency that is issued and regulated by a country's central bank. They're similar to cryptocurrencies, except their value is fixed by the central bank and is equivalent to the country's fiat currency. Many countries are developing CBDCs and some have even implemented them. So it's important to understand why they are and what they mean for society. In this episode, we'll be discussing the goals of CBDCs, the types of CBDCs, the issues they address and create, and how they differ from traditional currencies. Firstly, let's talk about the goals of CBDCs. In many countries, a large portion of the population doesn't have access to financial services. The main goal of CBDCs is to provide businesses and consumers with privacy, transferability, convenience, accessibility, and financial security. CBDCs could also decrease the maintenance of a complex financial system requires, reduce the cross-border transaction costs, and provide those who currently use alternative money transfer methods with lower cost options. A CBDC also provides a country's central bank with the means to implement monetary policies to provide stability, growth control, and influence inflation. Central bank digital currencies would also reduce the risks of using digital currencies in their current forms. Cryptocurrencies are highly volatile, with their value constantly fluctuating. This volatility could cause severe financial stress in many households and affect the overall stability of an economy. CBDCs, backed by a government and controlled by a central bank, would provide households and consumers with a stable means of exchanging digital currencies. Moving on to the types of CBDCs, there are two: wholesale and retail. Wholesale CBDCs are primarily used by financial institutions. The central bank grants an institution an account to deposit funds or settle interbank transfers. Central banks can then use monetary policy tools such as reserve requirements or interest on reserve balances to influence lending and set interest rates. Retail CBDCs are government-backed digital currencies used by consumers and businesses. Retail CBDCs can eliminate intermediary risk, the risk that private digital currency issuers might become bankrupt or lose customers' assets. There are two types of retail CBDCs: token-based and account-based. Token-based retail CBDCs are accessible with private-public keys. This method of validation allows users to execute transactions anonymously, while account-based retail CBDCs require digital identification to access an account. Now let's talk about the issues that CBDCs address and create. The Federal Reserve has published a report on what it believes are critical issues a CBDC meets and issues that need to be addressed before one can successfully design and implement these. CBDCs address issues such as being free from credit and liquidity risk, cross-border payment improvements, supporting the international role of a currency, financial inclusion, and expanding access to general public. However, CBDCs also create issues that need to be addressed, such as financial structure changes, financial system stability, monetary policy influence, privacy and protection, and cybersecurity at the same time. Alright, before we wrap this up, I'd like to talk about an agreement between India and United Arab Emirates, where they've signed a memorandum of understanding to collaborate on CBDCs by conducting joint pilots. So CBDCs, as we know, are digital versions of fiat currencies that are backed by central banks, offering several advantages over traditional currencies, including faster and cheaper transactions, increased transparency and security, and improved financial inclusion. So the collaboration between India and UAE is expected to strengthen the global financial system and promote the use of digital currencies, paving the way for some other countries to also join in developing and testing these CBDCs out. The central banks will explore the possibility of interoperability between CBDCs of two countries and conduct proof of concept and pilots for a bilateral CBDC bridge that will facilitate cross-border transactions of remittances and trade. So in conclusion, CBDCs are a form of digital currency that has the potential to provide businesses and consumers with privacy, transferability, convenience, accessibility, and financial security. They are a centralized form of currency that is regulated by the central bank, and they have the potential to simplify the implementation of monetary and fiscal policies. However, CBDC also need to address issues such as financial structure changes, financial system stability, monetary policy influence, privacy and protection, and cybersecurity. It will be interesting to see how CBDCs develop and affect the financial landscape in the future. Thank you for listening to We Gonna Make It podcast show. We hope you enjoyed this episode and see you in the next one. Goodbye.